You've saved 10,000 francs or more. Now what? Invest it, leave in the bank, or find a financial advisor? Here's the truth. 10,000 is more than enough to start your journey to financial freedom. And in this video, I will show you how I would invest it today, right here in Switzerland. Hey, it's Charlene, and this is the channel where I share my 10 years investing experience with you all for free. Like and subscribe for more. And before we talk numbers or platforms, let's get one thing clear. It's not about how much you have, it's about what you do with it. So basically, 10,000 Swiss franc sitting in your bank account loses value every single year. You might think, but inflation in Switzerland isn't that bad. And true, locally it's very low, but globally, inflation still sits around 4 to 6%. So that means every 10,000 shrinks by 4 to 6% every single year. Do nothing, and in 10 years, half of the value is gone just by sitting still. But 10,000 Swiss franc invested wisely, that's the seed of your freedom. I left my corporate job after building a 7-figure investment portfolio, and I started 12 years ago just with around 500 Swiss francs. That was my life saving actually back then when I was at my final year of my university. So if you already got, for example, 10,000, you're not late. It's not small amount. You are ahead. And this actually concludes my first step, your mindset. You really have to believe and understand that 10,000 is more than enough to start investing. And investing is not something that's good to have, nice to have. Investing is a must. And no, you do not need a finance degree, you do not need to be good at mathematics, and you definitely do not need a financial advisor selling overpriced mutual funds or insurance products that earn them huge amount commission. And my friend, you are smart, you lead projects in your company, you solve problems, you can learn to invest on your own easily. But first, clear all the myths around investment and adopt the mindset that you can build wealth starting now. Okay, now let's talk about step number 2. And this is actually where 90% of people fail. And before we move on to this point, I just wanted to say if so far this video is making sense to you, I would love to invite you to my upcoming free investment masterclass. I will show you exactly how I built a 7-figure investment portfolio and quit my job and how you can do it too. Spots are limited, so sign up now. The link is in the description area. Okay, now let's talk about step number 2. Like I mentioned, this is really the area where a lot of people fail. Even my own students and close friends, they ask me the same question. What's the best investment in 2025 and where should I invest? Where should I put my money? ETFs or stocks or cryptocurrency? And if I live in Switzerland, what should I invest in? And what if I move to Asia? So if you are asking these kind of questions, it means you are skipping the most important part of investing, which is your goal. So real wealth building doesn't really start with picking products. It starts actually with you, with your life and your dream. And ask yourself, why are you investing in the first place? It really needs to be specific with a timeline. So for example, do you want to retire early with 1 million Swiss francs in 15 years instead of waiting until 65? It's a good goal. Or do you want to buy a property in Zurich over the next 3 to 5 years? Or do you want to have your first 100K and take a year off to travel the world with your family? Or do you want to build a passive income stream to give you more freedom today? So your investment goal is your North Star. It determines your timeline, your risk tolerance, and the kind of investment you invest. Without a goal, every investment will feel random. You will chase trends, you will panic during market volatility, and you will second guess yourself constantly. Oh, am I doing the correct thing or not? But with a clear goal, you will know exactly why you are investing. and you will have a filter to cut through noise, and you will stay focused when everyone else is distracted. So before asking what to invest in, ask why you are investing in it. So before asking when to invest in, and that is how real wealth begins. Now let's talk about step number 3. And here is actually where a lot of people get misled. And some coaches or YouTubers online will tell you, oh, just invest in crypto, follow my strategy, you will get rich. And some may say, oh, ETFs are the only smart option. And your financial advisor, they might be pushing you to buy some insurance products or just define them as investments. They are not. And here's the truth. There's no one-size-fits-all investment. You need a holistic view, not to become an expert in everything, but to understand your choices and forget about hedge funds, option trading, or day trading. As a beginner, those are not worth your time. Even me, I don't touch them. Instead, focus on mastering the fundamentals. These are actually 10 investment types every beginner should understand. So actually, I will put a list here. So first of all, developed market stocks. So think US, Switzerland, Europe, stable markets with global exposure. And then we have emerging market stocks. So for example, stocks in Asia, Latin America, higher risk, higher potential return. And bonds, loans to governments or companies. Basically, they offer you lower risk, but lower returns as well. And we have ETFs, a bundle of stocks or bonds. They are great for diversification, lower fees. And index funds, a type of fund that tracks the market index, super low cost, passive investing at its best. And we have mutual funds. It's quite similar to ETFs, but often more expensive and less flexible. And then we have Swiss pension funds. There are 3A, 3B. Some of them are tax advantageous ways to invest for retirement. And then we have REITs. REITs means real estate investment trust. So basically, you invest in property without really buying a home. And we have precious metal, gold, silver. We have cryptocurrency. They often offer higher risk, higher volatility. You only consider once your foundation is solid. I know here's a huge list, but now do you know all the technical details? No, my friend. You do not need to know all of them. But what you do need to know is the fundamentals, what each investment means and its purpose and its pros and cons. Build that basic understanding. It really gives you control and protects you from hype, from scams, and bad advice. And trust me, if you have proper guideline, you can learn all these kind of investment types just I mentioned above in just a few hours, like most of my other students did. Okay, step number 4. Now you understand your investment goals and you've got a clear picture of the key investment types. It's time to connect these two. And this is where strategy comes in. A good investment strategy isn't just about returns. It is about aligning your money with your timeline, with your risk tolerance and life plan. Let me show you what I mean. I will give you 2 examples here. So if your goal is to buy a property with down payment in 3 to 5 years in Zurich, for example, and you do not want to invest everything in stocks or stock ETFs, yes, stocks can grow fast, but they are very volatile. And what if the market dropped right before you need the down payment? You're stuck. Instead, you might keep a large portion, for example, in cash or cash equivalent, short-term bonds, or even a conservative ETF. So you want stability more than high returns here. But if your goal is to retire in 15 years, and quite similar to my investment goals actually 10 years ago, and you have a stable income, for example, in Switzerland, you can afford to take more risk. And that's where a mix of global stocks or emerging market ETFs and even a small portion in crypto might make sense. And that's actually what I did as well. And why? What's the rationale? Because you've got time. and you have time to ride out market ups and downs and come out stronger. So even if your portfolio experiences some ups and downs, you can always extend your corporate life slightly longer, right? Just work for a bit more, some more years to earn additional income. So the point is, your investment strategy is personal. It's not about copying someone else's portfolio. It's not copying your neighbor's, your friend's portfolio. It is about building a strategy, a plan that fits your life. So take what you've learned, your goals, your timeline, your comfort level, and create a simple, focused strategy around it. So that's how wealth is built, one smart, intentional step at a time. Okay, step number 5. You've done all the hard thinking. You defined your goal, you understood investment types, and you built a strategy. And now you need a platform to actually invest. So for example, for your Pillar 3A, your retirement savings in Switzerland, I personally use VIAC, and I know some of my friends, they use FinPension. I would say both are good. They offer low-cost index-based portfolios, but they let you choose how much risk you want. And for your 3B or personal investment account, look at platforms like IB, Interactive Brokers, or Swissquote. IB is great if you want lower fees and global access. Swissquote is easier to use, especially if you prefer a Swiss provider, Swiss quality. And here's the key, my friend. Open an account, fund it, and start investing step by step. Don't wait for the perfect time. The perfect time was yesterday, and the second best time is now. I've actually made several videos on how to open these accounts and choose the right platform, and check them out on my channel. And if you want guided support to start investing in Switzerland with confidence, join my free investment masterclass. I will walk you through everything in detail, no jargon, no pressure, just clear steps to help you invest smart and retire early. The sign up link is in the description. I will see you there.